Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker.
Hey, Paul.
And also joining me today is James Eng. Hey, James, how are you?
Hey, Paul. Thanks for having me.
So I'm glad that we're all able to get together and spend some time to listen to some friends of ours. The last time that they were on the podcast was, Michael, how long ago?
About 2 years ago. I can't find the episode number right now off the top of my head, but it's been a while.
It's been a little bit, so we're going to celebrate some of the success they've had since that period of time. But one of the things that I think that they do a great job. Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker.
Hey, Paul.
And also joining me today is James Eng. Hey, James, how are you?
Hey, Paul. Thanks for having me.
So I'm glad that we're all able to get together and spend some time to listen to some friends of ours. The last time that they were on the podcast was, Michael, how long ago?
About 2 years ago. I can't find the episode number right now off the top of my head, but it's been a while.
It's been a little bit, so we're going to celebrate some of the success they've had since that period of time. But one of the things that I think that they do a great job, and I want to kind of share their thoughts and how they do it, is talking a little bit about how they treat their investors. I think they do a fantastic and wonderful job on the relationship they have with their limited partners. And that is something that I don't think anybody else does, at least people that we do a lot of business with. I think that I'd love for them to kind of share some of their secrets about how they treat their limited partners as their friends and some of their friends as their limited partners. And so there's a great dynamic and relationship that they have, and I wanted to kind of have them explain a little bit about what they do. So sitting in the podcast today is Ken and Winn. Ken and Winn, thanks for joining us today. Thanks for coming in the podcast. We appreciate it. Ken, how are you?
Good. How are you?
And Winn, how are you?
Good. Great.
That's great. So I'm going to kick it over to James, and let's talk a little bit about some of your success, and let's talk a little bit more in depth about how you treat your limited partners.
So what I thought we'd do today is really catch everybody up. It's been a couple of years, and talk about first some of the transactions you guys have done, and then we'll get into more of the actual equity raising and the things you guys do specifically on that. So maybe tell us about a couple of deals that you've done in the last year and the structure of those deals.
Okay, last year we closed 2 deals, one in Denton, 160 units, and then we closed a second project. It actually is a portfolio of 2 properties in Southwest Fort Worth, total 222 units. So those are correspondingly $12 million to about $14 million each.
Okay, so you closed those 2 deals, and then have you closed anything else this year so far?
Yes, this year we closed another deal, 260 unit in Irving, and it's about $18 million.
Okay, so I guess the common thread through all of those were assumptions. So maybe talk about that process in terms of the loan assumption and supplemental, and then the time you had to close those deals.
So yes, all those deals are assumptions, and assumptions is going to be a lower LTV because it's an assumption you got to get the supplemental to work. So for a lot of deals, that would be the limiting factor. But luckily for these 3 deals, with the low LTV, things still work on the return side. So that makes it, a good deal for us to go after. In terms of timing, assumption usually take a little longer, but luckily we kind of have our people all lined up. So we were able to actually close those deals early and on time.
So on assumptions and supplementals, you typically have the max leverage is 75%.
Correct.
And so you on these 3 transactions, you had to go out and raise 25% of the equity.
Yeah.
So maybe talk about how you guys were able to do that in 45 days to 50 days. I think it took most of these deals to close.
Fortunately, we kind of have a network of investors that kind of like to invest with us, and they're kind of already ready and have their cash ready, wanted to invest. So when these deals come available, we're able to just call them, and we have verbal commitment pretty much right away. So
just a real quick question, James. Why did Ken and Winn, why did they have to assume these loans again?
So on these loans, these were Fannie Mae loans that had maturities about 7 to 8 years left on the maturity. And so the seller would have had a large prepayment penalty through yield maintenance. And so they were able to purchase the transaction with an assumption, and the seller would avoid that penalty. And so that allowed them to win the deal, get the assumption, and then Fannie Mae allows you to do up to 75% on a supplemental. So they were able to assume the existing loan, keep that in place and not pay it off, but then add a supplemental up to 75% on these transactions. So jumping back to Ken, so I guess maybe take us back to, a lot of times it takes a while to build a relationship before somebody will wire you, $50, $100, or $200,000 for a deal. So give us a little bit of background on how you got to know a lot of your limited partners and how they got comfortable with you.
Most of our investors are friends of ours, and luckily they have other friends that also interested in investing in multifamily. So it's a kind of relationship building process. So before we even have a deal, we kind of already talking to them about the investment. We kind of already building the groundwork already. So when a deal available, they're ready to invest. As a matter of fact, most of our investors who we talk to, we won't even let them in the very next deal that we have available. So they will miss a couple of deals before a deal is available for them to invest. So when that deal is available, they are ready to go. The only complaint they have is, why haven't you included me on this last deal? Okay. So that's a good problem to have. But we were lucky that, our investors are that way.
Winn, anything else that you guys do?
We treat investor often.
You do what now?
We try to treat our investors like friends. Well, actually, we are friends. Pretty much all our investors start out as friends first, and then our conversation, getting to know each other, kind of get to the investment area, and then we tell them what we do, and then most people are very interested in investing in real estate, but they just don't have a avenue, somebody they can trust and know enough about investment to actually make a investment. So once we kind of prepare them, get them to understand what we do, most of them want to invest.
So you've done 5-6 deals now, I think. Is that right?
6.
Yes, correct.
So take us back to maybe the first deal that you did. How did you get the investors that, when you didn't have necessarily a track record in owning and operating multifamily, what were some of the things that you were able to do to kind of get them to, put the faith and trust in you guys and give them, some capital invested in your deal?
So we started out as single family investors. So we kind of have a network of investors already kind of invest with us through single family. So when we kind of transition to a multifamily, most of them would like to, go ahead and join us and take the next steps. So they were ready in that sense, for our first multifamily deal.
So before you took any money on apartment complexes, you already had raised some capital previously to do some housing?
We sold a lot of single family houses to our investors, and they are doing really well, having us sold them the investment and help them manage it. So they are kind of already having really good results on the single family side. So we're not like invest together. It's more like we sold them, sold a single family to investors, and they will build up a portfolio of single family houses. So as they progress, they kind of transition to multifamily with us.
Got it. So once people invest with you, maybe kind of talk through it. This is something that I think a lot of people that kind of get in the business as syndicators don't really fully understand, but maybe talk through some of the communications that you have on an ongoing basis. So once someone invests with you, what are some maybe the tips or some things that you guys do that you think are successful to keep everyone, happy with you guys and with the level of communication on the, just the ongoing investment?
We try to have fun with it. Since they're all friends, so we'll throw a party if there's an excuse. So if we, happen to buy a property close on it, so we'll throw a party for our investors. So even people who did not invest in that deal, we'll invite them and treat it like a investor appreciation party, so that we will have fun together. And at the same time, we can talk about the investment that we just either close or have or going on. So they'll get comfortable with the investment and comfortable with us. Once they see other people who invested with us and how happy they are, they kind of build up some credibility, instead of me telling them, this is a really good deal and, you should trust me. Coming from another person, have a lot more credibility. So
And we also the investor first, because every deal I will put a lot of money in the deals, so the investor trusts us.
Yeah. So what Winn meant is that we're kind of investor first sponsors. Instead of trying to make our money as investors, as sponsors, we try to make our money as investors. So that each deal, we're going to try to put a lot of our own money into the deal so that we have a lot of stake in each project. So we invest it first instead of, being a sponsor first.
So on let's say Monterey was your first deal.
Correct.
How much of the equity was coming from you guys on that deal? Do you remember?
So we have to raise like $1.225 million, and Winn and I invest about $250,000, so about 20%.
20%.
Yeah.
For us, that's a lot of money. So we really watched, that property really, really closely, and I think our investor likes that a lot.
So you have the party, and you tell everyone about the deal, and then you guys do maybe monthly reports out to investors.
Correct. Monthly reports, and myself or Winn would call them, and just talk in general, as friends talk, ask about their life and, just regular day-to-day thing and, in the investments. So
what I like about Ken and what I like about Winn is what they do is they show a lot of respect to their investors / friends, a lot of respect. So they don't just have a small party at a clubhouse. They have it at the Marriott, and they reserve one of the small rooms at the Marriott, and then they bring in a sit-down dinner or lunch, and they probably have 70, 80, 100 people show up for that. Yeah. It is quite an event to go to. I go there, James goes there, some of the people that help put the transaction together. So we could tell a little bit of a story to their investors too about what's going on, whether, why we were thumbs up in the deal and why we kind of support Winn and Ken on this transaction. But what I like about it is that when you sit there and you listen to what the investors are doing, is that you answer the questions. So there may be maybe 25 or 30 minutes of questions that come up during a little bit of a presentation that you guys do on the transaction. And so you have one-on-one relationship with the person who's managing, really responsible, kind of the fiduciary of the investor's money. Imagine if you were a stockholder in Coke or McDonald's or General Motors. You couldn't have a relationship like that. They're not going to invite you out for a lunch or a dinner to kind of talk about the success of the deal. And what these guys do, and I think a lot of people should do, is make your investors your friends and your friends your investors in some of these deals. Give them an opportunity to kind of see a little bit of how you manage the property, why you like the deal, bring in some of the teammates, team players like James into the transaction, and listen to have them kind of explain why they like the deal too. So, I like how you guys do that. I think that everybody should do that kind of after closing dinner. We do it when we're together. We'll go out for dinner and kind of celebrate the success. Right. That's what you guys do for all your investors. I think that's something that is just a little bit of some feedback from the investors to invest more money in the future. Because just like how you guys send out, say, monthly reports, a lot of people don't send out monthly status reports about how the property's doing. A lot of people don't have conversations with the investors on a daily basis. They, when you buy an apartment building with progressive investors like Winn and Ken do, I think that that just spawns more business down the road. So I pound the table to treat your investors with respect. Do a closing dinner for all of them, kind of see how this whole thing came together, and then maybe bring some of the other people that were on the sidelines that didn't invest in the deal, perhaps that they should join and see the success and how you treat the people too. So anything to add to that, James, at all?
Yeah, and typically right after the party, you guys will set up once you stabilize the property, a chance for the investors to come in, and there might be 20, 30 investors in the deal. So it's very difficult during acquisition for them to see maybe units on the interior. Right. So setting up site visits, I think, have been very helpful for your investors to get to see the property and talk to you about what your rehab plans are and what you're going to do on the management side as well. And then on a couple of deals, you guys even have set up a WeChat, which I find informative, if not comedic, but it's basically just a very large text message group. Maybe you explain WeChat for the audience.
WeChat, very easy, and get a message, and we every week go to this property and.
Yeah, it's just basically it's an app on your phone. So every time one of us visit the property, we just kind of take some pictures out and send out a quick little couple sentence about, what's going on. So our investors like that. So they're kind of up to date, pretty much immediate feedback every month,
every
that
week.
kind of thing. Yeah.
Yeah, so I'll get, a message from Ken or the general partners on the deal, and it'll have maybe 15 text messages with what's going on the deal, but then I'll get another 25 from maybe each limited partner, and the limited partners will either just tell them if they have any questions or anything like that. So it's immediate. I mean, it's a great way, and there'll be additional 10 pictures on there.
It's amazing is that putting all that information out is cutting edge type of stuff, because a lot of people. You're doing stuff today, what's happening today, a lot of the reports that come back are maybe a month or 2 months old. But think of all the people who are not that don't live in the area, that say live in California, that don't have the ability to drive these properties.
Yeah. Yes.
And they kind of wonder when they go to sleep at night, that $100,000 or $150,000 I invest in this deal, did that place burn down last night? And is there trash all around the property? But this WeChat gives you the ability to kind of do a group chat and kind of figure out what's going on. So it gives you a comfort level, I think. James, would you recommend that for other people to be on that WeChat?
Well, I have to hit translate on each text message because it's mainly for Chinese investors. But I still get most of the message and the pictures come through. So if you can work it, you can do it on a normal text message as well. So maybe let's move in. So a majority of the properties that you've purchased now are getting bigger and bigger in size. Maybe you can talk to maybe some of the challenges that you have now as a general partner moving into purchasing 200 to 300 unit deals that you're seeing in the market now.
It's really the same as the Class C's, just there's a lot of competitions. With the prices kind of go higher, we would just kind of like the better location, better asset, going forward. So that's why we kind of target more Class B. But the competition is just as fierce for these property at Class C. So the challenge is to win one of these. We were lucky to be in the best and final on several one of these, but we haven't win one yet. So hopefully we'll win one soon.
When you talk to investors, what's their criteria? Are they do they have a preference C over B? What are they looking for in terms of returns? Besides getting to know you, obviously, and trusting you with the deal, but what are they looking for in terms of returns on their end? I
think what I try to emphasize to all my investors is really safety first. We don't want to lose your money. So that's number one thing. And then we can talk about how much can we make going forward. So with the higher prices and then the property tax, so I would kind of try to prepare them not to over expect, what the return is from what we enjoyed the last few years. So that will be, is an adjustment, but we still, expect a nice return going forward. But I'm going to have to try to temper that a little bit going forward. So
are they more sort of cash on cash driven, or are they thinking overall return? What are most of them looking?
Most of my deal is going to have a nice cash component and a capitalization at the end. Because I like kind of hybrid project, which a property is kind of already making money, so we'll give you a nice cash flow and have some kind of upside going forward. So, yeah.
Is there anything new that you've seen, or anything that you've seen? So you just went through the sale of one of your properties?
Yes.
Talk to maybe the sellers out there. Anything that you learned through that 2-month process in terms of how to prepare your property, maybe, and your staff on that type of stuff?
Yeah, so we sold our first property. We wasn't expecting to sell, but it was a good offer coming in, so we ended up selling it. So if I would actually going to sell the property, I would definitely try to push the rent income, as high as possible. Watch out our occupancy, make sure that stay at a upward trend. And now that I'm on the seller side, I can definitely see why people want non-refundable earnest money. So it helped me be a better buyer, because you don't really want people to go through your property, go through all that process, and have your staff being scared, losing their job. At the end, after all that, the sale doesn't go through. So So now on the other side, I really understand why people want non-refundable earnest money. So it will help me become a better buyer. Other than that, just have your property in good shape and keep the occupancy up and try to drive the rental property income.
You sold 2 properties the last year or so, is that right?
I sold one, and we're in the process of selling our second one.
So were either those listed, or were they both off market, or how did
both of them were unlisted? Basically, offer were coming in, and our plan was always to hold it for a long term. But the offer was too good, so we decided to go ahead and take the offer and kind of capture the upside, because we were able to get the return that we were projecting in 5 years in 2 years. So I just couldn't turn that down for our investors.
That's a hard thing to pass up when you compress your time frame.
Right.
Get similar returns, but you do it in half the time or less. That's good. I think that's one of the things some people out there try to get greedy. And if you go in and implement your business plan and there's still a little bit of meat on the bone for the next buyer to come in, I think that makes a lot of sense. It's kind of like a win-win for both sides, and you can take your capital and then return it to your investors. And that's a good way to have happy investors to go do bigger and larger deals. So the first deal you did was about just a little bit over 100 units, and last deal was about 260 units. Is that right?
Yes.
Has there been any major differences in the way, just besides the dollar amounts involved, that you've had to raise money? I mean, obviously, as you've returned capital either through monthly payouts or through the sale of your first property and now soon to be your second, has there been any major differences in the amount of the interest that the investors want? Are they just kind of coming out of the woodwork and seeking you more than you going out seeking them?
It's it's kind of like that kind of already. So we like to think that because, we're treating our investors right. So we kind of get a lot of recommendations, referral to other investors. So when we get to these bigger deal, we didn't really have any problems raising the cash, the equity portions of it. As a matter of fact, we kind of had to limit it and turn people away, and we kind of, and that's very hard too, because again, they're friends, and you've been telling them, you need to invest, and now you have this deal ready, and they get left out.
Yeah.
So, so that's the difficult, and that's another reason why we kind of go bigger asset and bigger property, just to accommodate everybody, so that everybody can get into it.
What about the brokers? How's your relationship with the brokers changed from the first deal you did? How hard is that first deal compared to, like, what's your daily like today with the brokerage community?
Yes, yeah. Now that they know that we are a real buyer, we get a lot of calls. So
They return your call now. Surprising.
yes,
Or they call you, right?
yes.
That's great. And that's certainly something we've always talked about. But as you get a reputation on the marketplace of doing what you say you're going to do, then people will bring you opportunities that you wouldn't have had when you're starting out. So it's kind of like an unfair business. And as you actually perform and deliver, then it gets easier and easier. And I think you just kind of echoed that. What we say is generally true in the marketplace.
Any advice that you would give people as maybe they bought their first property, but maybe it's a smaller property, 50 to 100 units. And then any advice, sort of maybe lessons learned that you've had the past couple of years in going from 100 to 200 or 250 units? Any lessons in there that would have made it easier for you? Or
Basically just really have your team kind of, build up your team so that they're ready to go. So line up your KP, line up your equity partners, get your proof of funds ready, get all capital involved, to underwrite the loan for you, get your management company ready. So you are really set, so when that opportunity comes, that you can actually go after it, and you can present, a good package to the seller, a credible package to the seller that will improve your chances to winning a deal.
maybe a unique part also, I don't know, when you purchased Monterey, were you still working your full-time?
Yes.
And then what made you sort of leave that and move full-time into real estate?
I guess that's really different for everybody. My wife encouraged me to do that because I was kind of, I could have probably stayed for a long time and not retire, but I'm so glad she made me do it. So that now that we're full time. So for everybody is different. So some, I know, friend of ours have to make sure they have like 2 times the income before they want to retire because they want that security. So at some point, you're just gonna have to make the jump, and then I think you'll be happy we did because the work-life balance is a lot better this way.
What did you do before you got into multifamily? What was that job?
I was an engineer for a defense contractor locally. Yeah.
And so what has multifamily ownership done for you? I mean, you guys just came back from a cruise up to Alaska. How was that?
Great. Wonderful.
Would you recommend the cruise?
Absolutely.
Absolutely. Yes.
You guys were gone for how long?
2 weeks.
2 weeks?
Yeah.
You probably could have done that with working for the defense contractor. I mean, you are a smart guy. I mean, Wynn's a very smart woman. How old are you? Are you under 40?
My daughter only 3 and
I'm actually older than I look, so this is pass on that.
The reason I asked that question is because you could have been working for another 25 years or
That's
20,
true.
20
Yeah,
years.
that's true, yeah.
Now you have the opportunity to get off the kind of the rat race and get into something else that you have a passion for. I mean, you guys owned how many homes before you got into multifamily?
70.
70 homes in multifamily. Now, you kind of probably could have retired at that period of time, but you wanted to work a little bit longer. Now, because it's scalable, multifamily is scalable, now you could retire now. So you retired, what, about 2 years ago, a year and a half ago or so?
Mm-hmm.
Yeah.
So now you have the opportunity to do more trips and
With family.
and
Yeah.
do more family times with
Yes.
Wynn's folks, so that, and your folks too. So that which is a great deal.
Mm-hmm.
So multifamily has been a big impact in your life.
It's fantastic. It's probably the best business anybody can be. No bank's gonna like lend you like 75% or 80% on any other business really. So this is like the best leverage, and multifamily is a necessity. So even on a downturn, people's gonna need a place to live. So to me, it's just the best business you can be in.
Yeah.
Is there anything else that we didn't cover that you want to leave with our audience?
What are
Good.
some of the typical things you do during the weekday?
Oh, okay.
Are you out looking for new properties every day? Are you?
Yes, basically our typical day is probably talking to investors
Yes.
and looking at new deals. Yeah.
Yeah.
That's probably the most things other than, your family thing. Yeah.
If people had any more questions about maybe your deals or, possibly meeting you or contacting you, what's the best way for them to reach out to you?
Yeah. Email probably would be a good start. Our email is uproperty@gmail.com. So it's yueproperty@gmail.com.
Are you going to be at the Old Capital Multifamily Conference?
I think so.
Yeah. Yeah.
Yes, we are.
So Ken will be there, Michael will be there, Paul will be there, I'll be there. So the multifamily conference for Old Capital is coming up October 5th. It's a Thursday here in Dallas. If you haven't got your ticket, we got probably about 25 more left. And you go on to oldcapitalpodcast.com and you can register right there.
That's great, Michael. Anything else going on in your life?
No, that's pretty much it. Just always want to encourage anyone, if you like the podcast, to tell a friend, refer a friend. We'd certainly appreciate that. And go to oldcapitalpodcast.com. You can also find the Multifamily Financing 101 white paper that we put together, as well as a sample due diligence checklist there as well. And certainly always appreciate ratings on iTunes or Stitcher as well.
That sounds great. Again, Ken and Winn, thanks for coming in. We appreciate your time. Thanks for telling us a little bit more of the story, catching up on us for the last, say, 2 years that you haven't been on the podcast. But I think, you guys tell a great story because you do treat your investors with respect. And I love the closing lunches or dinners that you guys have and the sense of camaraderie. It's almost like going to a wedding dinner or a birthday dinner because I see a bunch of old friends and new friends that we haven't seen last time. But all your investors do love working with you, so we encourage people to try to get that same feeling when they're out raising money and having people that you enjoy working with. So we appreciate you guys being on the podcast. James Eng, thanks for being on. Michael Becker, thanks for being on. The U's, thank you guys for being on. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.